episode of EPM Chronicles and Confessions. We are here with Gary Cokins. Gary, please could you introduce yourself and your EPM journey?
Well, thanks for inviting me to present with you and have a discussion with you. Yeah, my name is Gary Cokins. My undergraduate was in industrial engineering and operations research from Cornell University, 1971. Got my MBA at Northwestern University Kellogg School of Management in 74. If you're doing the math, I'm 74 years old, but I feel like I'm 44 years old.
Yeah.
My career was pretty much in three segments. The first decade or so was in industry, large U.S. Manufacturing conglomerate, then many years with consulting, 7 years with Deloitte, 5 years with KPMG, 5 years with Electronic Data Systems, not part of Hewlett Packard. And then for 16 years, I was with SAS. Many don't recognize what's SAS, Scandinavian Airlines. No, it's the world's largest privately owned software vendor that specializes in data science and analytics. I retired from SAS 11 years ago, and now I just have my solo single shingle little consulting firm. But the majority of the stuff I'm doing is training and educating and hopefully inspiring. My journey on EPM, I got involved with activity-based costing, which is an advanced form of management accounting, and I wrote a book on it. And then people said, "Oh, you're the ABC guy," like they were pigeonholing me. And I heard this term, performance management. What's that? And I said, I think it's really the integration of many methods: risk management, profitability reporting, but driver-based budgeting, process improvement, all these moving parts. And then I wrote a book. And so that's how I got to the end of this journey, Tim.
Fantastic. No, that's really good. Thank you for that. So, you're quite knowledgeable in the field and you've done a couple of books on this. Why do you think some of the pressures that are causing an interest in EPM in the past few years?
Well, it's going to take a couple of minutes because in my mind, there's several. The first one is just executives' frustration with a strategy failure. They're quite good at formulating strategy. Their frustration is failure to successfully implement the strategy. And there's a fair amount of empirical evidence on this. There's a Chicago, and I'm Chicago-based. I'm from Chicago, but now I'm in Raleigh, North Carolina. Executive recruiting firm that monitors the turnover, the firings of CEOs. It's been increasing every year. And I believe post-Enron board of directors are impatient with the CEO doesn't implement the strategy. Carly Fiorina at Hewlett Packard being a good example. She couldn't implement, they canned her. Number two, increased accountability. Today, there's no place to hide. Managers and employees, they will be monitored. They will be measured. Doesn't necessarily mean their job's at risk, but it could adversely affect their salary increases and job promotions. Another one is more rapid decision making. Unlike a few years ago when you could test and learn in conference rooms, today people are on the phone, go or no go, yes or no. They need to make decisions in real time. Another one is just mistrust of the management accounting system. Most managers do not trust the management accounting system. And the problem there is the CFOs and the accountants, they're a bit lazy, when they do their regulatory statutory reporting and they allocate overhead, which is actually more than often 50% compared to the direct expenses. They spread it like butter across bread using allocation factors like number of labor hours, sales amount, and so forth. Activity-based costing actually resolves that. Another force is just poor customer value management. The reality is customers are the source of value wealth creation for shareholders and owners. But unfortunately, most of the accountants and CFOs, they don't measure customer profitability. They stop halfway down the financial income statement at product gross profit margin or service line profit margin. So they don't go below and include channel distribution expenses, marketing expenses, selling expenses, cost to serve, and to actually get a profit and loss statement for each customer. Another one is just the budgeting process. I think the budgeting process is broken. My advice to people, and this is a shock to them, as I said, stop budgeting. Like, what? But that begs the question, what was the purpose of a budget in the first place? And can we replicate that purpose using some of these EPM tools? Another one is dysfunctional supply chain management. Now, this doesn't apply to people that are in retail organizations where they're selling to consumers, but those that are in supply chains with trading partners upstream and downstream, the problem there is most customers view their supplier as the enemy. It's an adversarial relationship. Let's see if we can negotiate lower prices with our supplier. If we put them out of business, so what? We'll get another supplier. That's got to stop. It needs to be a marriage. Supply chains are competing against other supply chains, so they need to collaborate and find mutually beneficial projects that'll save both of them. And then finally, the big one in my mind is unfulfilled return on investment promises from large IT systems like enterprise resource planning systems. And I think the issue there is if you ask a chief information officer or an IT director, let's say 2 years after they've gone through the whole journey of implementing the large ERP system, you ask them, how well do you believe the ROI has met or exceeded what the software salesman sold you on 2 years ago? They'd be hard pressed to say, I don't know, we put in a lot of work doing this thing. I don't know if we got the payback. That does not mean they shouldn't implement the ERP system. They should. All their competitors have. But the problem is the ERP systems produce a lot of data, but not information. You convert data information. So all of those are prying pressures. Let's implement these EPM systems.
Oh, phenomenal. That's really good. Could you describe a significant challenge in your career or EPM career, and how did you overcome that?
A big challenge, and I'll get to this probably even later, is there's so much resistance to change. People like the status quo. Only babies like change, their diapers. And so the reluctance to implement these methods, they think, oh, it's not worth the effort or be too difficult, or I don't have the time and I'm busy doing other things. And learning how to overcome resistance to change is something I've had to learn how to basically almost behave like a behavioral psychology or sociology major, and I'm not. I've got engineering degrees, and then financial accounting, controller, and all of that. So that's been sort of a challenge that I've learned to overcome.
Fantastic. So what's your most rewarding aspect of what you do, your career, or what you've done?
I like line managers and employee teams to get much better data. They deserve it. I think this has to do maybe even with my personal life. I shouldn't get into this. I'm actually Greek American. My last name is actually Kokinos. My parents in Chicago had a delicatessen. What else? We're Greeks. But my mom and dad always taught me, and we lived in a little apartment above the store. They taught me it's all about customers. Treat them well. Well, this is the way I look at line managers and employee teams. The CFO, the accountants, they're providing flawed and misleading or incomplete information. So when I can help people implement these systems, especially activity-based costing, and what I've been doing the last couple of years is training consulting firms and CPA firm advisory arms how to do what I do to implement, because I have a technique in implementing, maybe we don't need to get into it, but it's called rapid prototyping with iterations. It can get the system implemented in 3 weeks, not the 6 months. And then my pleasure is once they have done that, the consultants using my technique, I now know that the line managers and the employees of their client has got better information. So that's my pleasure. It's kind of giving.
Fantastic. I have looked at some of your books and very, very good, very inspirational. What's been your inspiration in terms of writing these books?
Well, it all began when KPMG in 1988 struck an exclusive contract with Harvard Business School professor, now retired Robert S. Kaplan, and people will know his name from the strategy map and the balanced scorecard. And incidentally, that's the solution to that first problem I had. I said about the executives' frustration with strategy implementation. The balanced scorecard and strategy map, resolves that. But then, he got recruited by KPMG to earlier in his career, he did the pioneering work in activity-based costing. I got recruited from Deloitte. I love Deloitte, but I didn't want to pass up this opportunity. For 5 years, I implemented ABC. I then co-authored a book that I wrote 90% called The Activity-Based Costing Manager's Primer. And then later on, I got pigeonholed. Oh, Gary, you're the ABC guy. Yeah. Then I said this performance management. And so then now that I had the experience of writing a book and then actually a second ABC book, I now knew how to write books, and I continued that way.
Fantastic. I mean, you've got a wealth of experience, and of course, we want to encourage youngsters and new people to come into our industry. What would you be your advice to them?
My advice, and I think I'll reflect on my personal career, is early on, I was a little conceited, a little cocky. Hey, I went to an Ivy League school. I got a Kellogg MBA. I'm a know-it-all. I know more than you. And somewhere along the line, I turned that 180 degrees and I said, people are not going to judge you using that behavior. In fact, they're going to misjudge you. Do it by asking questions, provocative questions.
Mm,
And the better the question, and if you ask really good questions, they're going to like not only that, they're going to say, wow, that's interesting. And then listen to their answers. So now you're paying attention to them rather than, trying to brag and boast. But typically my questions will lead to their interest in the EPM methods. And notice I
yeah,
now call them methods because EPM is not a system or a technology. It's the integration of these multiple methods. So when you ask kind of what I call pain questions, like, does everybody understand the executive team strategy? Are we measuring the right things? Do we know which customers are more or less profitable? Or those, and I've actually got about a dozen questions like that. You're creating discomfort in the person you're talking to. We call it the FUD factor, fear, uncertainty, and doubt. You're creating a little FUD for them.
right.
And at some point they're gonna ask, yeah, I'm not sure we're measuring the right things. I don't think we know. How would we solve that? Well, just so happens there's this portfolio of EPM methods. So my advice to young people is learn how to ask good questions and then be a good listener.
Fantastic. Yeah, so as you know, EPM's changing. You've seen it change in many years that you've been in the industry. What do you foresee in the next 5 years? What's going to happen to our industry?
Well, I think those pressures that I described at the beginning are going to intensify, and the preference to actually implement the methods is going to grow. And I think as more and more people learn about rapid prototyping with iteration methodology that takes 3 weeks, I also help people implement the strategy map and balanced scorecard 2 days when they realize, oh, the benefits are large and the administrative effort to implement it's small. Well, this is a go. This is a green light when right now there's just too many red lights preventing them to go. So I think that the adoption rate, the acceptance of implementing is what's going to be happening. But I do have a bit of a conditional warning. It's back to the behavioral change management. There's still going to be some naysayers who fear the implementation because they fear, oh, I don't want others to know what my costs are. Oh, I don't want to be measured. Oh, I don't want to be held accountable. And notice those again are all behavioral obstacles and barriers, and that may get in the way. But otherwise, I think the green light will happen. There'll be far more implementations. And then we've got the FP&A
Mm.
software vendors, they're basically advertising and promoting all along. So they're going to be giving a good headwind from the back to implement EPM.
Oh, fantastic. I really, really enjoyed today's podcast. I learned a lot. I'd love to do a few more with you in the future because I'm sure you've got lots of things to say and of course experience. Thank you so much for coming on the podcast.
Before we go, can I, in case any of the people are interested, a lot of the articles I've written are free and they're in my website at www.garycokins.com, GARY, C as in clock, OKINS.com. The horizontal tabs below them are free articles that I've written. You don't have to pay for anything on all of the topics that we talked about in the podcast. So thank you very much, Tim, for inviting me.
Thank you so much. I'll add those links into the post I do in LinkedIn and also in the YouTube video. So thank you so much and talk to you very soon, Gary. Thank you so much. Take care.
Take care.